The last task we are going to solve today is divergence. This is by far the most often asked topic, and we receive a lot of questions from traders about how to implement it in TSLab. So what exactly is a divergence anyway? Essentially, a divergence is a disagreement between an indicator and price, and it can have significant implications for trade management. When a divergence is spotted, there is a high probability of a price retracement. Divergence in an uptrend occurs when the market makes a higher high, but the indicator doesn't. In a downtrend, divergence occurs when a price makes a lower low, but the indicator doesn't. To create a script, we are going to take the indicator, MACD, and display it on the second chart panel. Let's find a good example of divergence. This one will do. Please note that the peaks of the indicator fall while the price increases. The divergence was not obvious, and sometimes you will come across a more prominent divergence on the chart. But for now, we are going to use this example. So what can we do in this situation? There are two choices. The first one is to take fractals based on the MACD histogram and compare their highs. Here, the high of the last fractal should be less than the high of the previous one. Simultaneously, the price should rise during this period. For comparison, we can take the price above the highs of these peaks. As a second option, we can also build fractals on candles and compare the price of their peaks, highs. The price at the tops of the fractals should increase, while the values of the MACD fractals should decline. Let's go with the first method. In this scenario, we are going to use a fractal by any data by number block. Before we do this, we need to build fractals on the MACD indicator. Let's connect it. Run, and try to determine the necessary fractal values visually. Okay, I see. With the values equal to 2, we have too many fractals, so we should enter a bigger value, such as 20 bars for each side. These values are more suitable for us. These fractals just stood out here, and the line shows their values. What do we do next? Well, we need to establish the current and previous fractal values. This block will be the previous value, set as fractal by any data 1. We will then take out the logical formula and describe the following conditions. The first thing we need to define is the lowering tops of the indicator. We state that the previous value of the fractal by any data 1, should be higher than the current value of the fractal, which is fractal by any data. Okay, this is the first point. Secondly, the price should rise at the same time. How do we determine whether the price has risen or not? To do this, we need to know what the price was at these two bars, this and that. Therefore, we need to know the numbers of the fractal bars that form these peaks. To do this, we are going to take the fractal by any data by number block. It goes without saying that the same parameters should be here as well. As we already know, parameters can be connected through the linked parameter block to further facilitate optimization. For the time being, I'll take it this way, so that it will be faster. We will also bring one more fractal by any data by number block with the same parameters, except this time we will put 1 in the past value field in order to find out the price of the last fractal. We will rename the blocks N and N1. That's it. We got the numbers of the bars forming the tops of the fractal. Now we need to determine the price above the peaks of the fractal. How do we get it? We are going to need the high block to do this. Furthermore, we need to take two formulas to determine how many bars have passed from the high of the first and the second fractals to the current bar. This value will need to be subtracted to refer to the previous value. Our expression will be I, which is our current bar value, minus n. Okay, then within that formula block, we will write I minus n1. We now know how many bars have passed since the formation of the peaks. Now we can write a condition in the logical formula. If we want to determine divergence, then the price has to go up. We will then write high By doing this, we will get the highest price which was parallel to the top of the last fractal. Then we need to continue this expression. High minus formula 1 minus high minus formula 2, which must be greater than 0, meaning that the difference should be positive. Note that we can replace this 0 with a constant to further optimize its value. This will help us to fine-tune the optimal difference in price between the highs. In this case, for educational purposes, we need to determine the mere presence of divergence, when the values of the divergence indicator decreased and the price increased in parallel. We can now see the divergence as well as a signal to it on the chart. Let's draw it again. There has been a decline. Here, the price has risen. A histogram signaling the presence of the divergence was not plotted immediately. It happened after the fractal was finally formed when 20 bars passed from the high according to our conditions. Let's find more similar situations on the chart. Here, we have another divergence as shown by the signal. Let's expand the chart and look. There was not a big decline in the peaks, but the price has risen in parallel. As soon as the final formation of this fractal ended, we immediately received a signal. Right here, there were two signals. Let's check them. There was clear divergence here. Can you see that the peaks are down? Here, the line indicates the value of one top and the other. At the same time, the price has gone up. You might have noticed that we made symmetric fractals. This can also be done for asymmetric fractals. We could, for example, take 20 candles on the left and 5 candles on the right. If we do this, the signal might come a little earlier. Let's try to do it. This will just be a case study. Additional settings and optimization can be made during the development of the script. We will change the number of candles on the right to 5. Run and check. There was a problem right away. Notice that a small fractal has appeared. The histogram signal immediately identified it as a divergence. However, it has little value to us. Therefore, everything should be properly configured and checked. Additionally, MACD values can be smoothed in order to remove such situations. Then we can build fractals using the average data. As a result, the small, useless fractals will come across less often. In general, there's plenty of room for customization. In this lesson, we try to consider the algorithmization of fractals in detail. You have seen that fractals are a very interesting combination of candles and can be used to describe market waves. Then, through market waves, you can build many strategies, so we encourage you to use more fractals in your work. From our personal experience, and based on the feedback of many successful students, we can confidently say that traders who use fractals in their trading systems can build good profitable strategies for any instrument and any market. Thank you for watching. We look forward to hearing from you about your strategies with fractals.